Are student loans creating a hidden barrier to small business success? The numbers tell a surprising story, and it's one that's rewriting the rules of commercial credit risk. Welcome to the Commercial Pulse Update for August 19th, 2025. The Experian Commercial Pulse report is a bi-weekly snapshot of the US economy and its impact on small businesses. Let's begin with the key economic indicators. Inflation held steady at 2.7% in July, with core inflation rising to 3.1%. Rent inflation dipped to 3.7%, the lowest since 2021, and food inflation eased to 2.9%. Energy prices remained lower year over year for the sixth consecutive month. Unemployment inched up to 4.2% as job growth slowed to just 73,000 new jobs in July, well below expectations. The three-month average is now the weakest since the pandemic recovery. And one more note on inflation. Wholesale prices rose far more than expected in July. The Bureau of Labor Statistics announced that the Producer Price Index jumped from 2.4% in June to 3.3% in July, almost a full point, providing a potential sign that inflation is still a threat to the US economy. Small business optimism rose to 100.3, its highest level since February, showing resilience despite mixed economic signals. Consumer sentiment improved to 61.7, also the highest since February, but still 7% below last year's reading. The Experian Small Business Index registered 44.7 for June, down slightly from 45.2 in May. That's a 0.5 point drop month over month and 10.7 points lower year over year. With the index in the mid-40s below the neutral range, small business conditions remained less favorable than average. The data points to cautious expansion, constrained by higher borrowing costs and softer hiring. This week's Commercial Pulse shines a light on student loan debt and how that debt may or may not impact small business owners in terms of risk. US student loan balances hit $1.63 trillion in Q1 of 2025, up over 550% since 2003. Surprisingly, during the repayment moratorium, balances continued to grow, but only slightly. Experian's consumer database contains over 1.6 trillion of outstanding student loan trades, and the average balance of those loans is roughly $8,300. Since 2019, we can see movement in the number of business owners who have outstanding student loan debt. 5% of business owners now carry student loan debt, up from 4% in 2019. In 2020, some student loan repayments were forgiven. What's interesting is business owners with student debt have opened a larger share of new commercial credit accounts, 14% this year compared to 11% pre-pandemic. Delinquency risk is higher among those owners, especially newer businesses. For example, unpaid government-backed loan holders in new firms saw 4% delinquency rates compared to 3% for those without student loans. Owners without student debt generally show stronger credit profiles, longer business tenure, more active accounts, higher balances, and commercial risk scores averaging 58 compared to 53 for owners with unpaid government loans. So why does it matter for risk managers? Well, personal debt obligations directly influence small business borrowing capacity, repayment performance, and long-term growth potential. Understanding this crossover is key for credit assessment and portfolio strategy. And there's a lot more to our study of student loan debt and small business risk in this week's report, so please be sure to subscribe. If you found this update helpful, we encourage you to explore more by visiting our Commercial Insights Hub. Also, subscribe to our YouTube channel. And if this video has piqued your curiosity, reach out to your Experian account team to start a conversation about the possibilities we can unlock for your business. Last, remember to keep informed, to stay ahead, and we'll catch you on the next one.